Hello, and welcome to the final unit of KPIs in integrated reporting, Unit 8, an SME perspective. In this unit, we'll look at integrated reporting from the SME perspective. While integrated reporting may differ in an SME context, the integrated reporting principles are applicable regardless of the size of the company. So we've met a lot of the guiding principles that should guide integrated reporting, such as strategic focus, future orientation, connectivity of information, stakeholder relationships, materiality, conciseness, reliability and completeness, and consistency and comparability. So these should all apply to the reports of SMEs as well. So while larger businesses may track hundreds of indicators or KPIs that we've met, an SME has limited resources and hence must measure less. Transitioning to integrated reporting is an iterative process. So how to get started? Well, first issue a statement of intent, then conduct a stakeholder mapping exercise to identify your stakeholders. Think about how the company creates value for these stakeholders. Then consider the company's business model. Determine what resources are needed for the process, and then try to improve cross-organizational communication. So these are ways for SMEs to get started on their journey towards creating an integrated report. And it is a journey, so it's an iterative process that will take many steps. What should they report on? Well, the same content areas that larger firms should report on. The organizational and its external context, its governance, its business models, the risks and opportunities facing the company, its strategy and resource allocation, the performance measured using KPIs, the outlook of the company about the future, and how they created the report or their basis of preparation and presentation. One major issue when it comes to integrated and sustainability reporting for companies of all sizes is data availability, or where to get the information to report. For SMEs, external reporting requirements are limited and internal data sources serve financial and tax purposes only. So where do they find the information they need to create an integrated report? Luckily, there are some existing data sources that can be tapped to find this information. First, utility and other bills are a good source of information regarding the company's natural capital. So if a company wants to know how much electricity they use in a given period to calculate the amount of energy they use, they can look to their electricity bills, which report how much electricity in joules they use in a given period. If they want to know how much waste they create and how much waste that is recycled, they can look at the bills from their waste disposal provider. If they want to know how much water they use, they can look at their water bills as well. So this is a good source of information that's readily available and can be used. Other sources of information include customer relationship management systems. So if the company wants to measure and report on its relationship capital or the relationship with its customers, it can look at information from the system that may have customer satisfaction ratings, might tell the number of customers, where they are, how many are existing, how many are new, and so on. Another source are supplier required audits. So as large companies that are beginning to be covered by mandatory reporting standards require information about their supply chain, this will lead to more supplier required audits. So this information is the information that can be used in your integrated report as well. But also by creating an integrated report, it will make answering these audit requests much easier. Other areas where data can be sourced is the payroll system to look at information about the company's human capital, its gender diversity, and so on. Other sources include tax reports and social insurance, information regarding loans, cash management systems, bank statements, inventories, management accounting systems, and regulatory data. So the first step is not setting up let's say, new sources of data. It's to find out what you already have access to and collecting it in one space to be ready for reporting. Let's now turn to some specific indicators SMEs can use to get started on their integrated reporting journey. With regards to natural capital, they can measure the total electricity consumption, their total consumption of fuels, the total number of kilometers in flights taken for business travel. This can be combined into their total energy consumption. It can also be transformed into their carbon footprint. Company can also report on their total water consumption, how much waste they generate, and of that, how much is recycled. These KPIs can be measured and tracked over time to see how the company is performing. The company can also measure its performance in relation to human capital using KPIs. First off, it can look at the employee satisfaction using some sort of a survey. If not in place, it needs to be put in place. It can also look at measures such as the number of lost days due to injury, the total absenteeism, how gender diverse the company is, how gender diverse the management is, employee turnover as a more indirect measure of how satisfied employees are, how much the company invests in its employees through training and development, the number of employees receiving formal annual performance reviews, and the number of employees disciplined or dismissed on ethical grounds. With regards to social and relationship capital, as customers are usually one of the most important or salient stakeholders in the business, we can look at customer satisfaction. If there's not a survey already sent to customers, this is something that would need to be created that will provide useful information for reporting, but also for the operation of the business. We can also look at other measures such as customer quality, so the number of justified quality complaints, and then the number of justified complaints about the product safety. We can also look at the relationship between the company and another stakeholder, its suppliers, by looking at supplier satisfaction and supplier on-time payment days. The measures we discussed last were all absolute measures, but we can also, as our integrated reporting journey progresses, break these measures down into their component parts. So we can report on the amount of energy that comes from renewable sources and so on, or the percentage of their waste that is recycled. With regards to measures of within and outside the organization, this is something that might be developed through time. Relatives measures are something that can be measured very quickly. All you're doing is scaling your, let's say, your carbon emissions by your revenue or by some other metric. Progress measures are probably very important to measure for SMEs to see how the company is progressing, whether it's getting better or whether it's getting worse. Future-related or future-orientated measures such as using scenario analysis might be something that will be developed later. The principles of materiality, connected and contextualized KPIs discussed in earlier units also apply to SMEs. What SMEs report on should be dictated by materiality, or the materiality of the issue. The KPIs it reported should be connected to the company's stakeholders, its material issues, and its strategic objectives. Earlier, we met one way to contextualize this information was to use a connectivity matrix as above. Another thing the company should do to contextualize its KPIs is to report it alongside the company's strategies, policies, actions, resources, and its targets. Finally, and bringing us full circle back to our very first unit, remember that the KPIs that an SME reports should be insightful, reliable, comparable, and contextualized. Thank you for your time and attention, and I wish you success on your integrated reporting journey.